I would like to invite Wasif on the stage, who will start with the panel discussion.
I'm going to introduce the panel very quickly. We've got James Borley, who's Director of ComplyPort. I would invite him up onto the stage. Hey, James. Little round of applause, come on. We've also got, we're really happy to have Teresa Cameron. She's the Group CEO of Clear Junction. Welcome, Teresa. And of course, in the trenches, Oliver Kalmer, founder and CEO of BC Remit. Basically, can you as a business, if you are a business doing remittance, doing money transfers, can you offer digital stablecoin services if you haven't done anything else? Is it something that you can just do off the cuff?
No, is the short answer, just off the cuff. So this goes back to those remittance firms that are either registered or authorised by the FCA as a payment institution. Obviously, you qualify as an MSB as well. But you get authorised based on the business model that you've advised the FCA that you're doing. And that may be using Fiat, it may be using something else. But essentially, if you vary from what you told the FCA you're going to do, the FCA will either say, well, that's a variation of your permission. It's unlikely, because if you're just doing remittance and it's just the nature of the remittance that changes, that's not a variation of permission. You have the money remittance permission. However, you would still need to notify the FCA of a change of business, in the same way as, you know, your target market may change in terms of your customer types. The FCA needs to know that what you're doing today is what they approved you for when you first submitted your application.
So it's not just a plug and play?
No. The FCA may hopefully give more guidance, and this goes back to Vishal's comment on consultation of the FCA and giving further instruction and guidance. But the rule of thumb, you know, stablecoin irrespective, if you are changing what you're doing today from what you were doing when you first got authorised, then you need to tell them.
And what happens if you don't? What's the problems?
Well, ultimately, they can take your licence. And you can see today there was a decision notice against an MSB for not being registered with HMRC. But if you read that notice carefully, it had never been registered with HMRC, despite being registered by the FCA for 5 years. So if you sort of extrapolate that, it could take up to 5 years for the FCA to actually come round and tap you on the shoulder. But, you know, I'm in compliance, I'm ex-FCA, I would say, don't take the risk.
I suppose one of the other questions that I really want to put forward is that regardless of everything else, there is still a commitment to look at stablecoin and use stablecoin within this jurisdiction. So that obviously is really good. I suppose it comes with a high level of regulatory involvement from the regulator on purpose, because they're saying, well, okay, we're going to do it, but if we're going to do it, we're going to do it with high restrictions. Tell us a little bit more about that in terms of the regulating stablecoins and what that could mean for people in this room.
To be honest, it's not something I'm that close to, which is why I was at pains to try and say I was not going to mention stablecoin. So, you know, you're not going to trip me up too much on that one. But again, it's one of those things that's been talked around about for many years, in the same way as, well, not the same way as Vishal explained, but in a similar way as crypto assets and cryptocurrency. And again, they settled early on a definition of crypto assets. But again, it is, and we were discussing this briefly earlier, I think I come from a background of having been part of the team that implemented the first payment services regulation. I went up and down the country telling firms payment services is coming and being regulated. You need to be ready. And going backwards one step further, when the European Commission drafted the Payment Services Directive, on which, you know, the UK legislation was and still is based, it was at odds to be technologically neutral, and that cut across all aspects of regulation. And so the payment rails that are used to conduct those payment services, they're sort of irrelevant to a certain extent. It is just technology that is changing. Fundamentally, it is money. It has a different form. You receive the money. You are responsible for it until it gets paid out. So that's the guiding principle I would apply, and that's why I probably don't get too hung up on the stablecoin.
Excellent. I'm going to move over to you, Teresa, to just ask you a question now. Tell us a little bit first how you got involved in this industry, because everyone asks, how do you get involved in this kind of industry? And then tell us a little bit about treasury solutions and why we should have those and not accountants even.
Okay, so the way I got involved in this industry was fresh out of A-levels, deciding whether I wanted to go to university, thought let's just get a job, ended up working on the life trading floor, which was a very great experience for someone so young. And that's really where I got my passion then for everything financial, payments, treasury, foreign exchange. So my background is treasury. I'm definitely still a treasurer at heart, even in my new role as CEO. Payments business is a giant treasury project for someone like me, which I really enjoy. But following on a bit from James, I think probably the first use case for stablecoins is actually in treasury payments. So not necessarily providing that service to clients initially, but using that internally as a treasury tool, particularly in remittance businesses. This can be a really good way to unlock, funding and value that otherwise would have to be kept to manage liquidity in different locations. People can switch rails between local collection rails in Fiat, move money cross-border, 24/7, and not having to have all of the capital for a young, growing business tied up in liquidity pools. So that's, the first growing use case, out-of-hours liquidity, cross-border liquidity. I think client solutions will come. Regulatory clarity will bring those client solutions to the forefront. But being able to provide customer wallets in the same way that virtual IBANs are provided in the fiat world.
It's the, what is it, interoperability?
Is that the word? Between the two rails, switching. It's local rails are very well established payment schemes, FPS, SEPA, 24/7 schemes. But when you want to move outside of in the sort of back end, when you're a business, although you're offering these payment schemes to your clients 24/7, in the back office in treasury, you're still managing your own liquidity and your own cash 9 to 5 with banking hours. So you have to provide that 24/7 to your clients with 9 to 5 banking. So this is where stablecoins can lengthen the day so that you can unlock liquidity.
Absolutely. So that is what we're probably going to see now in terms of the future and going forward. This mix between the fiat and the digital, I suppose, between that space. And I suppose the need for a treasury manager is that much more important there.
Yeah, I mean, I always have this discussion. I'm careful here because Oliver's accountant as well. But the difference between accountants and treasurers, sure. And in a small business, you have limited resources and you need to bring someone in the team. Sorry, Oliver, but I'll always champion for a treasurer because the difference between the two really is, accountant, the way I look at it, accountant is always looking at what happened last week, last month, last year. The treasurer's what's happening today, what's happening tomorrow, what's happening next week. And that really is, that having that resource in a business can unlock this, capital. And I really approach stablecoins from a treasurer's mindset and how it can help me to manage my cash and liquidity better.
Excellent. I mean, so insightful. Taking that on board, I'm going to move on to Oliver, actually. Oliver 𝐚𝐽, who is at the coalface, like we've said. He's run this business. So all of these things that you've been talking about, he's been living. So both of you have been talking about the regulations. You've been talking about the processes and services, and obviously you've been living it. So tell us a little bit, Oliver, about your business and also how you see the space developing.
Yeah, sure. Thank you for that. But first of all, Teresa, I'm not an accountant, so no worries. I'm an analyst, so I'm all about cash flows as well. So I
know what?
totally relate about that. The treasury use case and how important it is, especially for remittance companies, like us. So maybe a brief background about BC Remit. We're a fintech company. We provide online money transfer or remittance services. We're mainly online, or we're purely online. We don't do cash. We don't do over the counter. We're live across UK, Europe, US, Canada, and we have a particular focus on the Philippine corridor. We do our own fulfillment in the Philippines. So if anybody needs liquidity or needs payout to the Philippines, let me know. So in terms of the stablecoin use case, we've been using stablecoins, I would say, for a few years, maybe since 2023. And as Teresa correctly mentioned, it's really for our treasury use case. We don't offer stable coins directly to our customers because it's not, number one, we're not allowed to. Number two, it's not relevant for our customers. Our customers really want cheap, fast money remittance, and in a way, stable coins help in that process. But it's not it. So we use it again in what we call a sandwich model, wherein we take fiat, convert it to stable coins, and then send those stable coins across the globe, and then convert it back to fiat, and then fulfill the customer's transaction. Also, I think it's good to point out that it doesn't really remove the pre-funding requirement of the remittance operation, but what stable coins allow is make that process a lot faster. So it makes the pre-funding requirement a lot smaller, I suppose, because I think the benefits of stable coins, which I think Teresa kind of mentioned, is they're fast, they're available 24/7, they're not subject to banking hours. So, yeah.
So this is a question, I suppose, for the three of you looking at the future. I'll ask you one at a time, really. It's just in relation to where you see stablecoin and where you see these particular areas of development. Are we going to see consolidation at the beginning with the FCA, with some of the regulatory authorities, or are we going to see expanded growth more so, or is it a mixture of both? Where do you think we are in terms of where we've come from to where we're going? That's a question I think first to James, actually.
Gee, thanks. I don't have a crystal ball on this one, so I think it is more likely to be consolidation. So, stable coins are not new, as Oliver's obviously identified. They are in use. They are used for settlement. So again, it's going to be a case of incremental change to the extent that there is change. What you do get is clarity on what more else you could do. How could you exploit stablecoin in ways that aren't currently being exploited? So, in addition to treasury management, in addition to settlement outcomes, what else can you do? You then have the roadmap that's set out by the regulator as to what that looks like.
And Teresa, in terms of what you've seen, let's just say a year ago to what you're seeing today, how has your work changed? How has your work-life balance changed in terms of what you're doing?
So there's a lot more. I think before even a year ago, people were saying, "Oh, crypto, stablecoins, it might come in the next 3-5 years." But we're actually now seeing that it is come, and I think regulatory clarity has helped that. We mentioned earlier about what's next to come. I think that we will have some new stablecoins. Everything at the moment is dollar-based, but there's some exciting innovation going on in GBP-backed stablecoins, Euro-backed stablecoins, particularly in this geopolitical climate that we find ourselves in now. I think having some other options of where those coins are pegged against is going to be another key to opening up innovation. So regulatory plus extra stablecoins, some more credible backing of stablecoins, I think that will all help adoption. And I think this time next year, rather than just treasury use cases, we might see that into innovation in products for clients.
Indeed. Really important. And of course, Oliver, I suppose taking on board those particular points, you can come back to those as well. But here, this is the kind of million-dollar question as well. What are the good stable coins?
No, it's still evolving, but I suppose to answer your questions, the good ones are the most popular ones. It's like USDC and USDT because they're the most tradable and most available, I suppose. But I think this space is developing very rapidly. So there's, as Reza mentioned, there's other stable coins that are backed with in other currencies like sterling and euros. So it's a fast evolving, I would say, space. So yeah, I think it's something that, especially for remittance companies, it's something that at least have to look into.
And I suppose this is just an off question because this is all about economics and finance. But does what is happening in terms of politics and the way in which politics is working, does that have an effect? And does that have, do you see that taking effect with where the world is in terms of recessions and everything else that people are talking about?
I don't know if to me, it's, for us, the adoption of stablecoins is really from a practical point of view. It's not really influenced by any geopolitical or any other, even regulatory. Of course, we've checked, we've done our research on that, but I think a lot of remittance companies could relate to this. I always will say when I talk to partners with banks, we're like water. We go where there's less friction, where there's we adopted stable coins because it's not because they're the in thing or anything. It's just because they help us in our operations. They help us particularly in our treasury operations, in our liquidity, because everybody, I think most people in this room knows that how important is liquidity or pre-funding in the remittance businesses. Yeah.
I don't have any more questions. Unless there is any more questions, any more. Do you want to have a quick 1 minute, or is that? I think we're going to end it there. I think I want to just thank our panel. Honestly, the stuff that you've said today is so succinct and so on point in relation to your experience and what you bring to the industry. So thank you so much for doing that, because it's so important for others to actually understand, one, what it's been like where you are, one, what it's like where you want to necessarily go, and of course, how you're doing it. So all of those particular things are covered by our panel today. So thank you very much to all, James, Teresa, and Oliver. Thank you.